This goes out to all the women in the world, especially her. You know it don't even matter your age, don't even matter your color. Yo, fellas, I ain't forget about y'all. This is for everybody that like to dance. Just listen to what I'm saying and do it and take a chance. I put my hand up on your hip. When I dip, you dip, we dip. You put your hand up on my hip. When you dip, I dip, we dip. I put my hand up on your hip. When I dip, you dip, we dip. You put yours, then I put mine. Then we can dip down low and roll and grind. Just get on the.
Hey, it's Soleil in this episode 508 of the Orange Pill Investor. And today I want to continue to talk about the ramifications of the earnings call from Friday and address the lagging strategy performance compared to Bitcoin over the past year. And I went ahead and modeled, hey, appreciate it. Thanks, Howard. I went ahead and modeled the dilution shares. I was actually interested in doing this originally to model out what Saylor's voting power would be over the next 20 years, 25 years. And so I started having Grok model out at the current rate of dilution, assume 30% amplification on the preferreds, relative ATM over whatever, 2.5, and then 100% of the dividends on the preferreds being paid out through common ATM. And I'm not terribly, I didn't run that model because I wanted to just be like, oh, this is what Grok said, and it's awesome and amazing. But it's kind of to just demonstrate the overall point that I made quite a long time ago on True North, and that I think Saylor is trying to recreate the Immaculate Conception of Bitcoin. So Satoshi created Bitcoin, and then he up and disappeared and left Bitcoin as a donation to humanity. And I think Saylor's doing something very similar with strategy, right? People are pissed off about the dilution. And I think one thing that I really haven't heard anyone else talk about is that eventually he will be diluted down to next to nothing. And the model had him down. Oh shit, I can't even remember now. Let me just pull it back up. The model had him down to his voting percentage in 2030 would be like down from 45 to 36%, in 2040 down to 19%, and then in 2050 down to 9%. And so I think, actually I revised those. Anyway, the point is his voting power continues to decrease. And I think he's trying to replicate that with the company. Instead of just, him having his key man risk, eventually the rest of us, all of the shareholders will kind of have a democratic say in the company. I mean, it's always the institutions that have a large part, but if strategy continues to remain popular with retail, then maybe this will be kind of like a company of the people 25 years from now. So that was the original reason why I even wanted to do the model in the first place. But then I kind of pivoted and I was like, well, you know what? Let me just figure out what does Grok think that the share price would be while I'm at it, right? While it's thinking. And I had to refine it a bunch of times. Like you really have to be careful with this. So I'm not just taking everything that Grok tells me or any of these AIs tell me as gospel, because the first time I tried to model it and I was like, okay, how many Bitcoin will strategy have at those dates, right? 2030, 2040, 50. And let me just scroll up. Grok told me that that strategy would have 2.2 million Bitcoin in 2030, 59 million Bitcoin in 2040, and 2 billion Bitcoin in 2050. And I was like, maybe not. I had to remind Grok that there's a 21 million cap on Bitcoin itself. And Grok was like, oh yeah, my bad, I'll recalculate. And then went 2.2 million at 2030, 21 million at 2040, and 21 million at 2050. And I was like, okay, so Grok is basically assuming that strategy will have all the Bitcoin, and the rest of us are just going to are completely sell out. Anyway, I had to massage it and get Grok to understand that those were kind of some ridiculous assumptions. But I ended up, the numbers don't even really matter on the projections, but what I was really hoping to find out was, our strategy's goal of being a 2x levered play actually realistic, especially considering over the last year, not only are they not up 2x, they're down 60% compared to Bitcoin up, 60% of Bitcoin's gains, right? Bitcoin's up 54 over 1 year period. Strategy's up 17%. So Bitcoin's up 3x over a 1 year period. And that is about to get way worse. So this ratio, when on November 20th, when Strategy's all-time high was $500 a share, and Bitcoin was 94. It's going to be even worse, because Bitcoin will be up from 94 to 107. That's barely like 15%. And Strategy will be down, at current prices, will be down like 50%. So in the next 17 days, the 1 year chart is about to get real red AF. So I ended up kind of massaging it, and a couple of the more realistic expectations for Bitcoin holdings for Strategy ended up being like, I don't know, somewhere close to 1 million. Not quite 1 million in 2030, or was it 1.2 million? Doesn't really matter. But I went ahead and repeated the analysis with Perplexity, and they came out with vastly different Bitcoin prices. When I say vastly, I mean like 20% different. I think Grok was like, okay, Bitcoin will be 800,000 in 2030, and I think Perplexity was like 900. And this was assuming a decreasing 50% CAGR down to 30 by 2050, and a bunch of other crap. All the dilution, all of the this, that, and the other. So, but the point is that Grok was saying that Bitcoin would be up like 7x and Strategy's price would be up 13x. And Perplexity said that Bitcoin would be up closer to 9x and Strategy would be up like 18, 19x, which is right on target with the 2x leverage position. Now, within that, if we put Strategy and Bitcoin's price over the top of each other, there's going to be a ton of like Bitcoin's up, Strategy's down, Strategy's up, Bitcoin's down. They're not going to be, it's not going to be a daily levered play like MSTX or MSTU, where they're literally just going off of Strategy's price and 2x levering off of Strategy's price and pegging it to that. So that's not what's going to happen here. There are going to be places where Strategies may be trading at below 1x MNAV, and those prices that I mentioned, or that I made the two AIs assume, was literally that Strategy would be trading at 1x MNAV. This This was not even granting Strategy any multiple whatsoever. And the reason is, I mean, if anybody understands what leverage is at the most basic level, right? If you went to a platform that let you leverage, Bitcoin, and you're like, hey, I got $106,000, I could just buy one Bitcoin. Or, some platforms will let you go double leverage and get two Bitcoin for 106. But if Bitcoin drops below, some liquidation price where you would get a margin call, maybe it's 100, maybe it's 95, then you either have to make a deposit of some fiat to get you out of a margin call, or you just get instantly liquidated and you don't have any money left. So that's one advantage of letting a company that, they like to repeat intelligent leverage, but it's just as much unfair. We have tools that you don't leverage, right? They can just print infinite amounts of shares at the ATM, and whether you like the ATM or not, it's still an extremely powerful tool, right? And, Jeff's done all the math on how low Bitcoin would have to go before they would even be at risk of, not having enough Bitcoin to justify their leverage. But even in that case, none of their Bitcoin is encumbered, so it's not a damn thing anybody could do about it anyway. So if you're a sophisticated options trader, or if you want to go to a site that lets you buy Bitcoin and leverage, you can get leverage, right? I can go to iBit, and I can go out to whatever, as far as they'll let me go. Holy shit, we can go to 2028? And if I don't want to spend $6,000 on 100 shares of iBit, I can get the same, let's go down to maybe 30, 90 delta. Let's go a little bit cheaper. So for half price, right? For half the price of 100 shares, I can get the 40 strike, which is 0.84 delta. So I could get two of these. And one delta is basically just the equivalent of one share. So I could get 168, the same price action of 168 shares for the same price as 100 shares of iBit straight up. Right? So you can go in here and select whatever kind of leverage you want. And that's fine. But, these iBit calls have duration risk. So at some point, if you don't get the God candle that you're looking for, you would have to either exit or roll this position at this expiration date. So there's a lot of other things to worry about besides just, hey, I'm competent enough to get 2x leverage. Well, that part is simple enough, but Strategy itself just has a lot of powerful tools. They have, privileges extended to them by the government, right? And so, Strategy will probably trade below 1 MNAV, maybe, if some weird shit happens. And, there are certain catalysts that Strategy has that Bitcoin doesn't, right? S&P 500 maybe one day. That probably won't happen until, Bitcoin forces their hand in a way, because all of the S&P's customers will have Bitcoin, and they won't be able to just deny the one or two companies that want their Bitcoins. They want credit for the Bitcoin, whereas 99% of their customers don't have Bitcoin. Right now, they don't want to rug pull the where most of their money's coming from. But eventually they'll have to. So there are still some catalysts on the horizon that strategy has that Bitcoin doesn't. But then, of course, there are things like, the people who diamond hands through Bitcoin are not necessarily going to diamond hands through negative price action like what we have over the past year, right? There's plenty of people who were like, I should have never bought strategy. I should have just bought Bitcoin, and then just slapping their foreheads and exiting their positions and, basically flagellating themselves for losing their toxic Bitcoin maxi status. And then there's, I think, kind of the realization that strategy is not getting into the S&P 500. How much of this hangover is the bullishness because we thought S&P 500 inclusion was a catalyst? If it is a catalyst, then not getting in is an anti-catalyst. I don't know if there's a word for that. Headwinds, maybe. We'll call it headwinds. So maybe all the people that thought, okay, S&P 500 inclusion, maybe here, maybe here, maybe here, they're all kind of like, this was a miscalculation. And if the market is forward-looking 6 months, maybe the market doesn't think S&P 500 inclusion is coming this year or maybe even next. And there's people bailing out because they're not going to get the pump that, or maybe the market has decided that we're not getting the S&P 500 front running that we thought was coming. So there's going to be times when strategy will underperform. It doesn't have to be anything too complicated. Now, of course, if you don't agree with what the company's doing, then yeah, you shouldn't own it. But as far as I'm concerned, the calling it amplification instead of leverage is kind of like a distinction without a difference. I guess because the principal doesn't have to be paid back, whereas with the convertible bonds, that leverage does come due at some point, and those deals kind of roll off, and you got to put another deal back on and go through the whole cycle again. But yeah, I'm still of the opinion that the preferreds are going to be a more accretive way to stack Bitcoin than the convertible bonds were. So I do see it as an improvement. It just is going to take longer to add that amplification. Whereas, they could just spin up a convertible bond deal and get a couple of billion every chance they get. So it is going to require a little bit more patience, but over the long term, I don't really see this price action as being unusual. I don't see it as being indicative of any flaws in their philosophy, but it could be a direct result of the change, right? Maybe the market simply just is not impressed by the preferreds. They don't believe the preferreds are accretive or are gaining enough liquidity fast enough, and they're just not willing to wait, I guess, really. So in a sense, it could be the switch to the preferreds that is causing some of this, but not because the preferreds are bad, but because the market just doesn't like them right now. And maybe they're waiting for the, waiting for them to succeed before they're willing to get back in, which is generally how most of the market works, right? Which is why most people don't get outsized returns, because they're only willing to jump back into a stock once it's already started performing. Once it's already proved that it can dominate, then they'll get in, but maybe you missed out on 10x by then. And so if it can trade below 1x MNAV, it can also trade above it. And so I think the 2x leverage is base case, really, over 5 years. 5-year period. If I think that Bitcoin's up 700%, strategy's up 1400% over 5 years, and this is the least accretive, like this is just when strategy's trying to figure it out. It's like, okay, well, we'll buy Bitcoin with the cash we got on hand. Okay, well, we'll buy Bitcoin with these convertible bonds. We'll buy Bitcoin with the ATM when it's, when we're hitting all-time highs. This is the least accretive that strategy will ever be. This is the least effective that AI will ever be. And I think this is going to be the least effective strategy will be at accumulating Bitcoin. There will absolutely be diminishing returns on how much Bitcoin they can stack. And I think, Grok's model was like, okay, they'll probably top out at 2.2 million Bitcoin even in 2050 or something, right? There is going to be some theoretical asymptote that strategy will be able to approach. And I don't know if it's 1 million Bitcoin, 1.5 million, 2 million, whatever. But when Bitcoin is 10 million a coin, it's going to be extremely difficult to move the needle on Bitcoin accumulation. But that's every single person and company on the planet, right? So everyone is facing the same, has to face the same cost of Bitcoin. But when Bitcoin is at that price, I mean, strategy, if they're able to leverage, I mean, even if they're only able to stack, whatever, 100 sats, if they're still using amplification with the preferreds and Bitcoin CAGR is still, double what the dividends are on the preferreds, they're going to still be able to carry some amplification. So maybe they stack 100 sats for whatever, $100 million or something. And they'll be able to stack, 130 sats based on the amplification. So diminishing returns on the absolute number, right? The absolute number of Bitcoin and sats stacked, but they will probably still be the most efficient at leverage for as long as I need them to be, right? Like, I kind of feel like I don't really need, if I had to just have a portfolio where I at least had 2 positions, and I'm like, okay, I'll rebalance between these 2 stocks for the next 20, 30 years, I could probably just do that with Tesla and strategy. That's kind of my plan. Of course, I'm going to piddle around with some of the other Bitcoin treasury companies and miners and this, that, and the other thing, kind of for fun, really, just for a little variety and have something to talk about. But I think I could probably just trade those 2 positions for the next 30 years and they'll be fine. I think these are the 2 companies that are going to disrupt their sectors more than anyone else. Thanks for confirming that. That sounds good. What's up, K4? What's up, Tony? What's up, Outer Banks? Yeah. So, if every dip is a buy, it's not just a buy, it's an amplified buy. Perfectly acceptable if you want sovereign money, just stick to Bitcoin. But if you're willing to deal with some extra pain and suffering, you can dabble in the stock market and get some amplified returns in the long term. It might take 5 years, but that's the way it goes. And I know there could possibly be some pissed off people like, frustrated from what happened to the bullishness of talking about God candles and higher and the moon math, right? Of, okay, where can strategy go? How high can it go? And now I'm kind of like pivoting and flipping the script and saying, now I'm talking about the floor, right? Like nobody gives a shit about the floor. But to a certain extent, that's probably where most investors should be focusing, because there was some kind of statistic that said that a vast majority of people who open Robinhood accounts lose all of their money within months. They just, I don't know if they get into options and YOLO, or whether they FOMO in, buy at the top, panic sell, FOMO, panic, FOMO, panic, FOMO, panic, and now they're just broke, right? There's just, the stock market is rigged, and they have to take their ball and go home. And so I think for most investors, any way that you can reduce your chances of failure, which another way to say that is increasing your chances of success, is paramount. So you can YOLO into a penny stock that might be bankrupt in 6 months, or what happened with Nikola and Lordstown Motors and all of these other companies that ended up going out of business, looking for the next Tesla, right? Some of these Bitcoin treasury companies that try to follow the Saylor playbook will fuck it up, and some of them are going to go out of business. Everything will be hunky-dory when Bitcoin is going up, but as soon as we hit in a bear market correction, the bad ones will be exposed. The good ones will be fine, right? There will be some other electronic vehicles being sold by companies other than Tesla in 10 years. And there will be Bitcoin treasury companies that have, some measure of success, maybe better, maybe worse than strategy, but it's definitely not a done deal. So I think for most people, not failing is more important than hitting a home run. But I definitely do sympathize with the people that are looking for the home run and really just in a very bad mood about the last year. So I get that, trying to talk about the silver lining that even at 1x MNAV, strategy has a 2x potential. And I probably should have said not financial advice a long time ago, but even at 1x MNAV, strategy theoretically could have a 2x return. So when these November events happen and there's a ton of FOMO, that potential, could be 3x, 4x, 5x. This all-time high for strategy in November, if we track from, before the halving, so from January 1st, 2024, I think strategy was up 8 or 9x relative to Bitcoin from January 1st to November 20th. So can something like that happen again? Possibly. But even if it's only half of that, it's still like a 4 or 5x move. So these things will happen, right? There's going to be times when strategy is overvalued, right? It's going to be overbought and it's going to hit corrections. And then this whole scenario is going to play out again because people are going to FOMO into strategy at 1,000 and 2,000. And when it hits 1,000 and drops back to 500, but Bitcoin only drops 25% when strategy drops 50, these people will all be pissed off again. But it won't be these people because they've already exited the trade. It'll be a brand new cycle of people FOMOing in when strategy hits 1,000 or 2,000 and then pissed off because it's underperforming Bitcoin. So this shit's going to continue to happen. There's going to be pendulum swings that strategy has and pendulum swings that Bitcoin has, but those pendulums do not have the same period. So sometimes Bitcoin's going to be swinging up while strategy's swinging down. You know, maybe they come up with something that they think's better than the preferreds. Well, when that happens, maybe the market gets pissed off and penalizes them temporarily for whatever new idea they come up with, right? There's going to be all kinds of things that the market can tell itself to justify the price going up or down. So I could have said all of that with fewer words if I only had more time. What's up, Buffalo? Just put in my interest for the Strive preferred IPO on Fidelity. Is that wonder where else you can get it? For my wife, don't any preferreds myself. Yeah, I don't own any of the preferreds either. And like, I think they're amazing products, but not necessarily for rabid Bitcoiners, right? Like, I don't need the volatility stripped out of anything that I own. For me personally, I feel perfectly comfortable riding in Bitcoin's volatility and sitting in strategy's volatility and taking leverage in strategy, which is already leveraged Bitcoin. So like a leveraged Bitcoin position is perfectly fine for me. Like, now with that being said, when you're sitting in the euphoria of like a November 20th moment, it would probably make sense because it you know, unless you just have an extreme emotional mastery, like, you know what, just take half off the fucking table. Just take half off the table and you're like, well, I don't know what to do with this, right? Like if you know, for me personally, I'm just going to slam all of my strategy profits into Tesla, and if Tesla runs, I'll slam my profits back into strategy. But let's just say you're like, you know what, I've got strategy and I've got nothing else, and I don't want to sit in cash. Well, when a November 20th event happens, it kind of only seems like obvious. If you want to take some profits, and if cash is a melting ice cube, you could just slam it into stretch and get 10% returns on it. Kind of seems like a no-brainer. Now, you would end up, you know, they were hyping how it's tax deferred and all that good shit. But if you were going to use that as dry powder, you'd end up having to pay the cap gains on the tax deferred part of the dividend, you know, once you did sell. But, you know, plenty of people are like, I'm just never going to sell. But yeah, I guess I'm with you. I'm a volatility junkie. I don't need the vol stripped out. But for the vast majority of the planet who don't even like Bitcoin, you know, they haven't even got off zero yet. You know, for those people, it would probably be a much easier task to sell them on a stable coin that pays way more interest than their checking account. Outer Banks says, whenever there's a run up and mania starts to come back, it'll be so interesting to see the disbelief. Yeah, and you know what? I need it to happen like yesterday, because I just don't like, I have to just read these comments. You know, people insta reply to Sailor, fix your stock. You know, you're diluting the shareholders. You're just trying to get all the Bitcoin for yourself, and you're wrecking the comment, blah, blah, blah. Like, I just have to sit there and take it because there's no other chart. Like, this is the only chart I have, right? You know, I could screenshot the 5-year chart, but nobody gives a shit about the 5-year chart, right? Those people are not convinced. They only care about their cost basis, which is up here somewhere. there's a bunch of OGs, I suppose, that have cost basis under 200, but all of the people entering the space during this euphoria are having a bad experience right now. And yeah, so I kind of just have to grit my teeth and keep scrolling. But yeah, I really want to see another move up soon. Not necessarily so that I can dunk, right? But just so that I don't have to watch. I don't have to see those comments and bite my tongue. Let's see. If my 10 deltas ever get called away, I may put a chunk into the preferreds. Wait 3 months. Yeah, there's nothing wrong with kind of like sitting on the sidelines, collecting your thoughts. I think I've talked about OODA loops before. It's kind of a military thing, but it's observe, orient, decide, and act. And it's called a loop because as soon as you act, you go right back into observation mode again. And that's basically what you have to do, what you can do with anything in life, but you can also do it with your stock portfolio. So you should also kind of have a plan, right? Not just be like, okay, November 20th happened. Now I have to figure out what to do. Like back in here, you should have a plan. Like, what will I do if my 10 deltas get called away? Okay, bam. I will exit all of my leverage, take half off the table, and put it in ABCXYZ. You should already be making that plan back here and know what you're going to do. It's too hard to figure out a plan in the middle of the chaos. Actually running the 2025 deltas recently. Yeah, I think I'm in that range as well. The weeklies, where are they? No. I guess I'm in like 15 delta here and the 22 deltas here, which means these are probably ready to roll. They've been on for 11 days. Yeah. Anyway, yeah, so the 15 deltas are starting to get a little bit low for me, which just means that these are ready to roll. So I'll probably be dealing with these today. These, not so much. 22 deltas, only been on for 4 days, still have a significant amount of premium left. So let's see. Yeah, I started pre-split, but even holding with margin can be difficult sometimes to manage. Yeah, I'm kind of annoyed with myself that I got back into using margin. Not terribly thrilled with myself there, but I can't bring myself to exit positions to pay the margin down because strategies, I want to be accumulating here, not taking profits. So I don't think my margin usage is extreme in any sense, and I don't have any dry powder necessarily. Like, it's not like I have dry powder sitting in my checking account, but I do have some dry powder on a HELOC that I haven't used, right? So I could go out and get some dry powder if I wanted to take on more debt. But, in a HELOC would be not tied to Bitcoin or Strategy's price, right? That's just, the bank has already said I've got enough equity in my house that they'll just give me the money, right? So I do have a little bit of an untapped emergency fund, right? There's debt that I could acquire, and probably some paid off credit cards if I really had to go straight pure degen play. All right. So with all of that being said, let's get her done. These are ready to roll. Sold them for 9. They're worth less than 4. So let's reshare without volume. Roll expirations to December 19th. That's as close to 45 days as I can get. Actually, let's see what's safe here. So I've got 200 strikes worth 87, so I would have to sell at least the 287. I've got 250s worth 55, so that's 305 that I would have to sell. So anything over 305 is reasonable. And the expected move is 315. And I generally like anywhere between the expected move and like one standard deviation. So maybe I'll move it up to 325, kind of split the difference. Sometimes the whole numbers or multiples of 5 can have better liquidity, but these are all pretty similar. So no advantage really to that necessarily with this stock. But I also like to make sure, I try to collect twice as much of its current value, right? So if I'm rolling at 50% of its what I previously sold it for, then I'm going to try to double up the premium. So this works out pretty well. Probably have to roll it down a little bit. There we go. All right, that gives me a little bit of cash. And let's see, this has only been on since the weekend, but I sold them for 3, so 2/3 of the value has already decayed out of these, probably because the price is down. And so it kind of doesn't really make sense to hold them for another 4 days and try to collect the remaining 25% in the majority of the time. So let's see what would happen if I roll these strikes down. If I roll back closer to the expected move, I can get an extra $100 off of these. So I'll go ahead and do that. Now there's, $200 worth of extrinsic value left in these instead of the $80. That's also going to pump up my positive theta a good bit. I'm still running negative in this account, unfortunately. And since I am running negative, I'm not really terribly excited about adding more leverage, more negative theta. So I think I'm going to go ahead and buy shares in this account. So 6, should be able to get at least 6 shares with that, right? Actually 7. Yeah. There we go. So my plan is to add some more leverage if this dumps again, right? I'll peel off another 100 shares if we go under 250. And if we go too much farther under 250, I might be able to be convinced to add a little bit more leverage at 225. But that might be my breaking point, where I would just be like, okay, no, I'm not, I can't stomach any more leverage at this point. All right, the main account Plenty of extrinsic left here. Plenty of extrinsic left here. So nothing really to do. All right, the IRA. Tesla's pumping again. So that's cool. At least something that I own doesn't suck. So yeah, nothing to do here but sit and wait. It's been on for 11 days, but the extrinsic value is actually increasing. It's almost in the money. So I'll just be hodling. Not ready to roll. Not ready to roll. No buying power. Let's see, I rolled this one 11 days ago. So this same boat here. So let's roll this, and I'm selling this against a 300 strike that's worth 32. So I should have to sell approximately 330, 335 or higher. So let's roll 46 DTE. What did I say? 335 or higher? Yeah. That gets me extra couple $100. And this account, you know, it's got the least amount of money in it. It's basically just kind of like where I put my spending money. And since I don't really spend money, I don't mind being a little bit more risky with this one. I don't even own shares in this account. So I'm going to plow the money into some of the riskiest stuff that I can find, which right now are the March. Well, not that I can find. I could just YOLO this Friday, but the riskiest ones that are, you know, greater than 90 days still. So I'll just dollar cost average into this. I can get what, 2? There we go. So my cost basis on these is 472. So I've basically taken a 50% haircut on these positions, which is what I've been doing basically all year. All right. That's the last tasty account. So the 5K account challenge is has some buying power because the 200 shares of Wolf that I had were called away over the weekend at like 14 a share or something. And so now I've got 5,100 in cash, 3,100 is already being used as collateral. That leaves me $2,000 to play with. $2,000. So Wolf has been doing okay. I could actually, you know what? Do I need to roll before I spend my cash? Let's see if I need to roll this bad boy first. No, it's pretty much hasn't been on for, yeah, just a couple days. All right, so I don't need to roll anything, so I won't be getting any credits there. So maybe I'll just add, what was I trading before? Since I've got $2,000, I could go closer, to, you know, something that's closer to $2,000. If I sell a Wolf put, that'll only cost me like $1,500, I think. So I think I'll hit a CLSK. Liquidity is always good on this one. Bid-ask spread's like 7 cents. So that's nice. I can come down to 0.75. And let's see. Wait for my buying power to refresh. I've got 150, 320. So I could get another March, or I could get another debit spread. Yeah, this is for March too. So it's going to be hilarious if we get the pump after March, after these expire. But let me just see if the bid-ask spread on this kind of sucks ass. Yeah, this is much better. But do I even have enough? What's my buying power? Because I do not want to use a margin in this account. Oh, 320. Okay, yeah. Let's do 249. It said low fill likelihood. Oh, it filled. Oh, cool. I think that is going to do it. Well, let's see. K4 says, anyone else sad that Tom doesn't write Cherry Bomb anymore since he left Tasty? It might be hard to get on the Rising Star with him now. I'm curious what he's up to now. Yeah, man. That was I had that on my bucket list. I was like, man, I want to get on the Rising Star thing. And back here in 2021, 2020, right before 2022, I thought I had a chance. I was like, ooh, I'm going to get on Rising Star. Look at all this money I'm making. And then the Fed raised rates and all of my leverage went to shit. And then I thought, oh, okay, well, maybe in November, right, had that pump. So I had delusions of grandeur again. And I thought, okay, maybe I have a chance of getting on Rising Star again. And then, of course, I held on to way too much leverage during this entire time. So shot myself in the foot there. Let's see, last week you mentioned trying to sell a call against a bunch of your 9, 10, 1080s. Any more thoughts? Yeah. So, if I was just that bearish, well, yeah, that bearish, I could totally, right? So I've got 49 10s. The delta on that, on each one is only 0.05. But added up, this is the equivalent of 180 shares. I could easily sell one, probably really two covered calls against this. Not to mention, this also has a gamma value, meaning as Strategy's price went up, if we were to get a rally, this delta would go up to 0.06, 0.07, 0.1, 0.15, depending on how high it goes. Meaning this number would go up to 200 share equivalents, 250, depending on how high this moved. So all my poor man's covered calls are balanced with the short and long deltas. You can literally sell any strike you want with shares, because there's the worst that can happen to you is your shares get called away. So you can be as greedy as you want here. But I could probably sell two covered calls against these 9 10s. And is there a way to do it here? I think it would probably be something like this, where I really, this says deep in the money call, but I would just be changing this. And whoops. Let me see if I can make this work. So what did I have? The March 910s, right? This is just a double check to make sure that there's no, like, I'm just going to assume I'm setting this up today, not as my original trade price of 486, which I could actually do that as well. But let's just go with the current price so I don't have to change it. And number of contracts, let's do, well, how many do I have? 40. And if I try to sell I wonder if I can ballpark this. So it's yeah, you really can't use the equation that I would normally use. I can't just add this strike to this value because then I'd be trying to sell like the 915 strikes. So that really doesn't make sense. So I'm just going to see if picking something reasonable works, right? Like the expected move for 46 DT is going to be what? 335, 315 to 3. Let's just try 350s, right? 350s would be kind of reasonable, right? Yeah, that's above the 1 standard deviation line even. So let's just say I'm going to try to sell the 350 strike, but I only want one of them. Is it going to let me do that? Okay. And I want to see if I get wrecked if the price goes way up. So if the price goes up to 1,500 a share, would there be any risk? So this is good news, right? So those 40 910 calls, would appreciate faster than my covered call would get wrecked as long as I'm in the green. If I let it get too close to expiration and didn't exit this position, even if we pumped to 700 a share, that would be, yeah, so this would be a little bit risky. This would be, there's a little bit too much red up here. I don't like this. So I would probably have to be a little bit more conservative about the strike. Let's go 400 strike. I think this is going to look a lot better. Oh. Why did that not get better? Why did it get worse? Oh, okay, yeah. I still kind of don't like this, right? So we could pump to 900. And if I wait too close to like if I exited that position anywhere in the green, I'd be golden. But if you tried to hold too long, you could end up in the red. Where was that at the 900 strike? And at some point, it just doesn't become worth it, right? Like if I pick the 450, this is actually collecting $1,000. That didn't really move the red down very far. So there is a little bit of a spot here where you have to be careful, but you could absolutely do this. And if the price rallied to 1,000 a share in the next 2 months, you would just want to exit and take your $1 million, 900 grand. But you just have to be careful because you could easily turn, if we ran to 840 in this, for Christmas, and you're like, oh, I'll just keep hodling and I'll make a bunch of money, then you could end up actually losing all your money instead. But the point of doing this exercise is to show that there's no red at the top. Like if you absolutely get destroyed selling this covered call to the upside, there's no infinite risk here because you've got enough of these smaller positions to cover you to the upside. So actually, I think I was too nervous about the 350 strike, actually. I think the 350 was probably, let me just double check. Yeah, actually, there's still even really no danger in this red because you're just losing all your long calls. Actually, no, that's not true. You're losing 50 grand on the short call. Ah, that's why. Okay. That's why this is the sweet spot for catastrophe, because this is right where the 910s are not really in the money. So there's no profit here on the longs, but your short gets wrecked all the way from the 350 to here. So that's why this is kind of a dangerous play. So where is that? The biggest loss is at 882. Yeah, that's really not going to get any better. You just have to know that you can't hold this position to expiration. You have to kind of stay out of the danger zone. Have you played with the Tasty Trade backtesting tool? I've been tinkering and it seems like the MSTR 50 Delta 45 DTE is the winning combination. Lots of insightful info in there. I didn't because it wouldn't let me backtest. You know, maybe when it first came out, I didn't like it because it wouldn't either. Maybe I'm just too dumb to figure it out. It wouldn't let me backtest any stock I wanted. It was only like letting me backtest some of the more common popular names. But I'll play with that. I'll take another look at it because I didn't realize that I could backtest strategy. So the 50 Delta 45 DTE is the winning combination. Are you talking about longs or oh, so you must be talking short. 50 Delta? You mean over how long of a period of time? Because that would be, wow, that would be like selling just barely out of the, at the money 45 days out. That scares me. Like, I don't feel like I'm collecting enough premium to justify limiting my upside that much. So you got any additional information on that back test you were doing? Let's see. Buffalo says you're not getting red from the short call, you're getting red from the long calls. Yeah. Yeah, you just have to be careful because it's, below, at expiration, below the 910, your long calls expire worthless. So they're offering you zero protection. But your short call is exposed to disaster between your strike and 910. So that's why there's a whole bunch of red in this pocket right here. One year, take profits at 50%. Okay. I'll have to think about that a little bit more. I'm not sure what that would look like. Tool is nice, and you can export the data. Okay, thanks for that. That's definitely some valuable info. So it sounds like it deserves another look from me. And when it came out, I kind of looked at it and I was like, I don't want to backtest the S&P 500. I don't give a shit about that one. So, well, let's just take a look since we're here. Yeah, so I thought it was just, oh, so can I pick MSTR? Ooh, okay. All right, so past 12 months. Over the past 12 months, all my long calls should be completely getting wrecked if I, let's see, long triangle, long call, credit spread. All right. I don't know what I'm doing, so I'll fumble with this offline so that you don't have to watch me stumble through the learning curve here. All right, I think we are all good. That's all the trades for today. No buying power left.